Good morning, everyone. Welcome back to our Thursday morning trading room. The market's just opened up, and we can see here, well, actually, let's take a moment and take a look at the overnight. Get my Raptor all set up. There we go. So you can see the market has been a little bit more active, as we might have expected. Yesterday was fairly dull, but they were waiting on that FOMC announcement. You can see the overnight, quite a bit of activity here as the London session flip-flopped quite a bit. A little quieter through the Asian session, actually. Things didn't get active until Europe opened. But what's significant is the market closed yesterday somewhere around 46.90, give or take. And we just opened up here at around 4,700. Made a quick little run up near the overnight highs. And now it looks as though we are trying to test the lower end of this larger trading range that we see here. So we're only a couple of minutes into the day. Going to try not to get too crazy here, although the eagle is flashing us a rule of 3 signal. Technically, we only have 2 signals against the band, but we have that all-important test to the extreme. Let's see, what is this going to cost me to be wrong if I take it below the low of that bar? Well, it's a little bit dear, but we do get a chance at a second push on the entry, and I can cover above the high, which is encouraging. So we'll throw that order in. Oh, I should have put it another tick lower. It doesn't matter. Chances are pretty good that we're going to see the NQ try to decline here a little bit. They made a quick little run up, like I said, and they seem to be rejecting that, but it's still very, very early. It's only about 3 or 4 minutes into the session. Oh, way to go, Tony. Tony took advantage of a little bit of the Euro session. He says he got up early for the NQ rally in the London session, made 4 trades, 3 winners, 1 loser. All in all, a good morning. Way to go, Tony. With my time zone, sometimes if I'm up late, I'll end up catching the open before I go to bed. And sometimes I'll sneak in a trade or 2. And it just helps me sleep better, knowing I've made a profit. Here's the NQ falling off nicely, hitting our break-even trigger. And it looks like we're catching some early momentum on this market. Well, I don't think I'm going to let all that. Oh, yes, maybe I am. I was a little slow here on my stops. Will I be lucky enough to ride out this stop? We'll see here in a moment. Nope. Nope. They tagged me at break even, scoundrels. What I was going to do is I knew I had about 100 and change in open profit. I just wanted to pop out with that, but I was a little bit too slow. Nice opportunity here on the Hawk also. Solid first micro macro cross signal. Well, it does seem as though the trend might be down. Although Jim's giving me some advanced decline numbers here. He's saying 1,500 on the buy and just over 1,000 on the sell. This here on the Hawk now is technically a 4-arrow consolidation pattern. Oops, let me just throw this order in and I'll show you. So the 4-arrow consolidation, 1, 2, 3, fourth signal, you could also interpret this as a macro pullback signal if you choose. This is a little bit more aggressive trade right now because the market has tried to go lower and then it failed. Right? They gave up going lower and then they started pushing higher again. Get down there. Okay. So they managed to press down here. They're retesting the lows, which is all that I was looking for out of that particular trade. A retest of the extreme. And here on the Eagle once again, oh, I'm going to be a little bit late getting here. The Eagle, we had a nice signal. So here's our signal on the Eagle. This now becomes our signal bar because where the signal actually printed, we were against the ATR. So a lot of times we'll use the ATR as a filter, although this is a trend change signal, which is a high probability signal with the Eagle. So it doesn't matter whether you took it here or took it here. You probably would want to cover, oops, can't cover above the high. What, oops, can't do that one either. What's going on here? Usually the NQ is a little bit more forgiving. Oh, there it is. There's the max right there. So taking a little bit of heat as the market tries to sort itself out. Get back here. Might get a green bar sell, actually. But at the moment, it looks like we're still within this larger trading range that's kind of encompassed the market for the last couple of days. So if we take, here we'll go to the, yeah, this would have been around the FOMC or just prior to the FOMC announcement, I think. Somebody let the cat out of the bag. So the market's kind of been waffling between here and here. And you can see we're still more or less within those same ranges. You can actually expand it a little bit now to include the high here, but this whole, say from 47 to 46.75 has been a very influential area for the market. Okay, so even in spite of that little retracement, we came back with yet another sell signal there on the Eagle. And I'm sorry I'm going to be late on some of these signals as well. Good signal here on the Raptor. And yes, this is a first micro macro cross building here on the Hawk. Problem, of course, where are we going to cover this if the market's going sideways? You know, a big consideration. You'll want to enter below the lows. Can you cover above the high? Ooh, you can. Of course, that only lets you in with a single contract, which is a little annoying. Okay, this now into yellow bars. So we're going to negate that signal. Good question here from Richard. Richard says, I've been a DTS member for many months now and have grown to appreciate the power of the signals. However, I have also learned that structure and price action are invaluable in warning of tops and bottoms. Have you done a seminar on framing current price action and or identifying likely turning points to avoid false signals? No, I haven't, Richard, but that's an excellent suggestion. And if I could just put the ball back in your court, this is something that you may want to email Adam about, because he's the one who kind of schedules my time in that regard. So if that's something that would be of interest to you guys, we will make the time to produce something like that. And while I'm yakking here, the market is making some very solid moves. So this yellow bar signal here on the hawk, unfortunately, it was a macro pullback. The yellow bar spoiled the signal, and we didn't get that complementary or secondary signal. No matter, we should get another chance here. Regarding yellow bars on the hawk, the only signal I'll take with a yellow bar is the 4-arrow consolidation. So just as a for instance, this pattern back here where the market was retreating, if it happened that the yellow bar was the 4th arrow, I would still short it, because this one is pretty much a textbook 4-arrow consolidation pattern. We like to see the market produce these little bear flags or bull flags, whatever the case may be, or at the very least go sideways and consolidate. It'll give us, and then our 4th signal, I would be ready to go on the 4th signal. But then when the market came back, it spoiled our macro pullback signal here. And at this time, there was no way to know that this support really wasn't going to hold and that prices weren't going to challenge the upper end of the trading range. Had this bar remained red, it would have been a viable macro pullback signal. Unfortunately for us, the market probably ticked just 1 or 2 ticks too high, and that spoiled the bar. Okay, here we are with yet another macro pullback. And we're getting close to some serious lows. I think yesterday's lows were around 46.80. And the overnight lows were around 46.75. So there's some definite support brewing in the marketplace right now. Tony's asking, how many people in the room today? Well, today there's 15 in the room. Attendance seems to fluctuate between, anywhere from 15 to 40. Today is a little quieter. But people trickle in as well as the session goes on, I've noticed. At the top of the hour, we'll probably get another 3 or 4 or 5 people joining us. So another 4-arrow consolidation building here in the Hawk. They're making a good push lower, or attempting to press lower. The Geiger counter holding. All right, let's get an eagle trade on here. So I'm looking for a second push here, looking for a breakout, looking for the market to retest the lows. And looking for some momentum now as we take out that short-term support area right there. There we go. Oh, come on. Buyers digging in. Let's see the Geiger counter here. So, this is a tough candle. Loads of volume going through here right now. I'm going to do my best to be patient. The buyers are buying it back pretty good. Gary's asking, could you explain the Geiger counter operation? Absolutely, Gary. Now, the Geiger counter, even though I happen to have it here on the Raptor, is a universal tool. You can put it on any chart you want. It doesn't matter whether it's the stock market or the Forex or ETFs or whatever. It doesn't even matter whether you have it on the Raptor or the Hawk or the Falcon or a 5-minute chart for that matter. This is essentially a tape reader. So the time and sales, let me show you the traditional time and sales. Time and sales always makes me laugh because Adam, for those of you who have spoken to Adam or had the opportunity to meet him, know that he's slightly, well, I want to say addictive by nature, kind of the ADHD poster child in a way. But when I first introduced him to the time and sales, he spent all his time watching these numbers roll by, trying to make sense out of it. Now, when you're watching the time and sales, you rarely, focus on the onesie-twosie type orders. What you're trying to do is you tend to focus on the block orders that go through. And I'm only giving you an overview here. I'm not wanting you to watch the time and sales tick by because this will drive you crazy. But you're going to notice the bid and the ask up here. You see the bid and ask numbers? Well, those are your bid and ask numbers here on the Geiger counter. So what's the point of all this, Gary is saying? Why are we watching that? Well, watching the bid and ask, watching the order flow sometimes gives you a pretty good idea of who is in control of the market. But as you could see from the orders flying by, it's very difficult to make sense of that. So what the Geiger counter has done is it's actually done it on a visual basis so that you can see the order flow. You can see when there's spikes in buying or selling. The one feature I really like about the Geiger counter is this dial. When you see this dial swing over hard and hold and hold and hold, not just the touch and go type thing, but when it holds over like it's trying to do here now on the short side, if it gets over and just stays there, you're going to see the market eventually break down and head a little bit lower, at least short term. So what that does is if you're in a trade, like we're in a trade right now, I'm watching to see how much buying strength can come into the market. Can the buyers pull the dial over and hold it and hold it and hold it? Because if they can, I may as well jump out with what profit I have. Now you can see it's hopping back and forth, back and forth. The needle tries to give you an average of what's going on. So you notice the eagle was red there for a moment. Now it's white again, suggesting the market is more balanced, more neutral. But just kind of watching it and kind of taking stepping back a bit, getting a longer term view. See how it looks like the buyers are starting to put some effort in? Well, that means to me that the buyers are probably going to try to press this market a little bit higher, at least short term. So if you're trading, if you're generating a signal, pardon me, if you're generating a signal like we were with the eagle, you may want to take a look at the Geiger counter and see, okay, is the dial pulling hard over to the sell side? Does it look like the sellers are influencing the market more than the buyers? If so, go ahead and sell it. If it looks like the buyers are influencing the market more, then it's very likely that that support area will hold and the market's not going to make a solid breakout. Jim asks, when do we change from the December contracts? Usually around the middle of the month. I believe, I'll get you the exact rollover date, but it's normally the third Friday of the month. One second here. NASDAQ futures, December 18th. It will be the last trading day. And with the futures, you can trade well into that last week. Day traders won't start rolling until Friday morning, or some will. The early ones will start rolling Thursday. And Jim says the Russell seems to be weaker, lagging a bit. The NQ still chopping about. Now we're testing the bottom end of this trading range, right? And they've tried to break, but they're not doing very well with it right now. So I do believe we hit our break-even trigger. This would have been another situation where, or maybe we hit our profit target. No, hit our break-even trigger. This would have been another situation where I would have gladly taken the open profit, right? So our signal was here, our stops were somewhere around there. There was probably $100 in open profit there. Hit the break-even. I was actually going to suggest rolling my profit target up to the break-even. Just grab the $100. All right, so now we're getting a first micro-macro cross signal here on the Hawk, and I also see a trend change signal on the Falcon. So let's go take a look at that. We haven't looked at a Falcon trade yet. Oops, sorry, trend change signal already tripped. Trend line changes color. We have our up, we have our down, we have our up. This is a trend change signal. It is very much counter trend. It would also be just a short-term move. I would only be looking for a very short-term profit here because the market does seem to be paying off to the short side today, right? The trend does seem to be down. So when you take a signal like this, try to take the overall context into account. Don't just write me later and say, well, Eric, that was a trend change signal. How come it didn't work? Well, markets don't turn on a dime, right? Most breakouts fail. That's why the trend is so important. The hardest thing to do as a trader, I believe, is correctly identifying the trend. If you can identify the trend, you can make money. And you know, the thing that a lot of people overlook in regards to trend is when you consider some of the greatest traders in history, and I'm not talking of recent times, I'm talking like ever since the stock market, became a place for the average person to do some investing, going back into the 1920s. You're talking about people like Charles Dow, Richard Wyckoff, Jesse Livermore, to a lesser extent, people like Richard Donkian. These people, well, especially the early ones, Charles Dow, Richard Wyckoff, and Jesse Livermore, these people traded without charts. They traded by reading the ticker tape, where we get the expression reading the tape from. But what they had a firm grasp on was trend. And it doesn't matter whether you're watching, a 1 minute trend or a 1 year trend. It's important to be able to identify the trend when the market is trending and when it's not. Important for you to be able to say, yeah, okay, downtrend, I'm going to focus on sell signals. Or, market's moving sideways now. Time for me to, put on the brakes or perhaps try a counter trend. Like here's a counter trend signal in the Raptor. And look at that. We got positive slippage, but look at that vacuum, that void that occurred there. Now, this is a counter trend signal. This has very much the potential to develop into a double pullback, in which case I'm definitely going to be on the wrong side of the trade here, and I better get a stop in play while I explain the signal to you. There we go. We'll give it that far, and I'll give it a few ticks below. There we go. So how is this a counter trend signal? Well, we've migrated back into the hard edge. We've tested the lows here. So this is our test of the extreme now. And now the market is trying to move higher. This is a very, very aggressive signal because, of course, we may end up building into a double pullback, in which case we would be looking at the with trend signal, at the sell signal coming out of here, which is right there. Actually, I should try to cover this below the low. Oops, let's do this. Oh, shoot, there they go. I didn't disable my signal fast enough. I should have tried to cover here below the swing low. That was really the better place. But you can see too the problem with taking a counter trend trade. I wasn't able to take the with trend trade. Right? That's why counter trend trades are never that much fun. You get stuck, and then when you end up getting a trend signal, which you almost inevitably will, and then you can't take the with trend signal. Gold chopping all over the place today. Crude oil looking marginally weaker. I haven't been focusing on crude a lot lately. The markets have just been really blah as far as crude oil is concerned. Trend change signal right here, real quick one. Trend line changes color. Here's the down, here's the up, here's the down. You did get a second chance and a late filter entry off of this signal right here. Late filter entry, of course, on the Falcon. Filter goes out of sync, comes back into sync. Very important. It has to come back into sync. And then you've generated your sell signal. The whole time, however, the trend line does not change color. All right, so here's that Raptor signal again. I'm going to buy in again. Now, my problem before was my stop was too handy. So let's put my stop down there. And we'll see now why counter trend trades are a bad idea. What I'm looking at is a sideways range here. Right? And whenever the market's in a sideways range, it typically bounces off the lower end, tests the higher end until it eventually breaks out of either side. But it's going to break out the, oh, maybe not. I was watching the Geiger counter here. I was just about to say it's going to break out the short side. But now all of a sudden the buyers are buying it back. We'll see if that dial won't spin over and hold. That would show us some serious buying pressure. No, still trying to get down the short side. So here they go. They're going to generate another sell signal. And once again, you can see the problem with counter trend type signals. Well, I guess that's the luxury of being a trading room moderator. I can show you some bad stuff too. Yeah, Tony says the crude oil market's been a drag, but it's been showing over $1 over a 5-day ATR. So yeah, the range is there, but oh my goodness, the choppiness. Here's crude oil on the Eagle. So it does still make some decent moves. Yesterday put in a decent move after the inventory report, but prior to that, look at the mess. And certainly there's opportunities in here, but oh my goodness, what difficult trading. Lawrence is asking, two clouds overlapping on the Raptor? Yes. This is, okay, first off, this isn't necessary if you're thinking that you're missing out on something. This is something that Ricardo pointed out at the Raptor Trading Forum. Now, we do have a Facebook page for the Raptor traders and DTS traders. If you don't have the link to that, I suggest you send an email to Adam at indicatorwarehouse.com and he will direct you to that Facebook page. There's some very good ideas that are being shared there. And hold on, I've just made a mess of my my window. There we go. Okay. So what Ricardo was playing with, because of course the Raptor is that particular tool that you can actually tweak a little bit. You can't do much with the other DTS birds. The programming is locked on those. However, with the Raptor, he was experimenting a little bit here, and he was working off of the hard edge bounces. And he found that using a double cloud worked very well. So you ask, well, how do I put a double cloud on my Raptor? You go to your indicator window. You pull down here to your indicator warehouse tools, and you find the one that says Raptor Cloud. And you double click on it so that you're going to have two Raptor clouds in your indicator assortment. Ricardo was working with an 8 and 10 setting. Yes, 8 and 10, which I've also adopted. So the one cloud, you're going to want to just change the Raptor size from the default of 12 to 8. And you can experiment with this. Experiment with the market that you're working with. And I'm going to show you what you're going to be looking for in a moment. So he suggested for the NASDAQ and the stock indices a setting of 8 and 10. Now on that second Raptor cloud, however, you're going to need to change some colors, otherwise you won't know which cloud is which. So I made one of my clouds a different blue, and then you're also going to have to change your hard edge. Change that color also. And then when everything is to your liking, just click apply and OK, and voila, you're going to have two bands on your Raptor. So actually I should have been focusing on that this morning instead of showing you the counter trend signals. So what Ricardo found is that when the market intersects the hard edge and comes out, it produces a pretty solid signal. But the reason he went with the double band is for situations like this. So he was actually watching for a bounce off of either band, off of either hard edge. So he would be keen to sell a bounce off of this hard edge, in which case if the market had generated a sell signal here, he would have shorted. And then it came up here, hit the hard edge, our double pullback signal, which I was mentioning earlier, came out, produced a sell signal, and actually became a triple pullback, produced another sell signal. But all these bounces off of the hard edge, right? And besides that, it looks pretty cool. Here's the Raptor with the YM. And you can see these were also bounces, but they didn't encounter the second band. They only encountered the first one. Here's a nice bounce that encountered the first band, and that had very good follow through. Look at that, fell from the one secondary support line, tagged the second one. I love to see that. And here's one where it drifted through the first band, encountered the second band, came out, produced a signal. And you can do this on your own as well. You can go through your charts and find examples. But that would definitely fall into the higher probability trade category. Okay, so we had, it looks like a nice little trend change signal here with the Falcon. So trend line goes green to red. Here's the down, here's the up, here's the down. Decent follow through off of that one. And now it looks like we're getting a little bit of support coming back. The market's been in decline for about 45 minutes now. And typically at the bottom of the hour, so about an hour into trading, we'll very often see a reversal against the dominant trend if there has been a dominant trend, which is what we've seen this morning. We've seen the market head lower. So just a little something to tuck into the back of your mind. It's not something that happens all the time. But it's almost as though traders will start taking profit. You know, those day traders that would have shorted, you know, say shorted out of the open, which was way back here off of our rule of three signal. Those that had sold the open now would be thinking, well, okay, we're in this trade for an hour. Things might be firming up. Let's get serious about taking some profit. And what that ends up doing is sometimes moving prices a little bit higher. I'm just curious how the ATR strategy would have fared. No, still the same. You'd have to run the chandelier today to stay out of harm's way. But there's about $200 in open profit from your low down here to your stop. I don't know if I'd be prepared to offer up that much as risk. Well, that's for me personally. The tone definitely bearish today, though. Great question here from Gary. Gary asks, do you use high value and low value areas on all market profile composites? So for those of you who don't know what Gary's talking about, market profile is another way of looking at the marketplace from a kind of a volume perspective. You're looking at which prices are the most sensitive, which ones, they call it a point of control, which is that particular price that had the most volume associated with it on that particular day. And then what market profile does is it takes a look at the overall trading range on the day, and it essentially does a bell curve. For those of you who have done any statistics or high level math, it's an averaging curve. And the notion is that the market will trade or spend 70% of its time trading within this particular region. Now you can get market profile software, and there is, I think there is probably some value in it. As with all things that I tell you when it comes to adding stuff to your DTS system, the underlying question is always, will it help you make a decision? I know, for instance, Mike Filigera likes watching fast stochastics because it helps him make a decision. Is there something magical about using fast stochastics that you don't know about? No. It's just that to Mike's eye and to his experience, that is a tool that he can add to the DTS system to help him make a trading decision. Same thing applies to market profile. If this will help you make a decision, then by all means go for it. If it doesn't help you make a decision, well, then you really don't need it. Now, the nice thing about market profile is that you can more or less approximate it. So if we go back here to yesterday's trading, and sometimes if the market's been very active and we've got a lot of bars here, you may have to use maybe a time-based chart, or maybe condense the chart a little bit, because what we're looking at is we're just trying to identify where the bulk of the trading took place. In fact, for our purposes here, let me build a time chart. 1 second. And it doesn't really, again, there's nothing magical about this. You can use a time chart, you can use a tick chart. I'm just trying to compress it a little bit here so I can get it onto one screen and make this a little clearer for you. Okay, 1 second. Okay, so here's a 15-minute NASDAQ chart. And what we're interested in yesterday's range. So here's yesterday's trading range. If you were just to eyeball this and say, oh, here, I'm going to even change this. I'm going to tighten this up a little bit more, and we're going to go just with the session itself. Oh, that's still including some of the overnight. Okay, it doesn't matter. We're going to ignore this part here. Focus on this part right here. So the market's opened right about here, spiked up, fell down. Where would you say, or how would you draw lines here to encompass about 70% of the trading? Well, it looks like this part down here is a little bit more of an anomaly, isn't it? So I would probably say, the bulk of the trading looks like it occurred up here, maybe, I don't know, around 47.35. Remember, we're doing kind of like a bell curve here. We're trying to encompass about 70% of the trading range, and maybe 4,700. That would probably account for about 70% of yesterday's activity. Now, the one thing you cannot tell from eyeballing like this is the point of control, or what they refer to as the point of control, namely where the bulk of the trading took place. But it looks like these numbers up here were pretty popular. So I would probably say the point of control was probably somewhere up here. Point of control being that price where the market was most active. Okay, let's look at the day before because it might be a little easier. So again, not focusing on this part here, but just looking at this part here, what would encompass about 70% of the day's range? Well, the market's much tighter here, right? So probably somewhere around there and somewhere around, I don't know, somewhere around here, I guess, right? That would encompass about 70%. This little area through here would encompass about 70% of the day's range. Okay, so why is that all important? Why do we even care? Well, the whole idea behind market profile is that because the bulk of the trading occurred right through here, because the bulk of the trading occurred through this price range on this day, this area or this particular price is going to exhibit more influence over the market. So if prices trade back down into here, which they did, we would actually anticipate perhaps some sort of support to come into the market. Or if the market blows right through here, we would anticipate that maybe, the market is very, very strong or very, very weak, whatever the case might be. So here the market comes in, we would anticipate some support, and you can see from this particular bar, it was actually struggling quite a bit at this particular level, and this is why, because from the day before, this is where the bulk of the trading took place. This is where the most activity was. These trades out here were on the fringe. They didn't have a lot of volume or a lot of support associated with them. See, what traders tend to forget, or what they assume, I suppose, is that every single bar has the same amount of strength to it. No, it doesn't. Some bars or some prices will have a whole lot of activity, whereas others will have less activity. So you can see prices came down and they eventually slowed and started to retreat. So what did we say was the range for this day here? We said the lows were probably somewhere around, the 4,700 area, and the highs probably somewhere around here, 4,730. That looks, just to my eye, to encompass about 70% of the range. This one's a little bit more difficult because the market fell off so steeply here. So we actually have almost like two little micro ranges. We have a little range up here and we have another little range down here, with these prices kind of being the odd ones out. So again, well, why is this important? Well, because if we're assuming that the bulk of the trading activity occurred within this area and this area here, if prices rally up into here, we would probably anticipate them to turn around and head lower. And if prices fall into here, we would probably expect them to find some support and head higher. But you can see that support didn't last. Again, if these things help you make a decision, then by all means. And like I said, you can always approximate this. Just try to, step back. Try not to focus on, the last bar. Just step back a little bit. And you can do the same thing with the DTS system. You don't need to use a time chart. I only use the time chart because of the compression. I could, use the DTS here, and I could change the for the purpose of trying to do a market profile style analysis. I could try to compress the bars just by making a larger brick. It doesn't look like that one's going to be big enough. Let's try this one. Okay, well, this one's going to be a little bit too tight. Let's go somewhere in between. Oops, sorry. You guys can hear me now? Sorry about that. Again, I'm sorry, I don't know how much, when I rolled over onto my mute button, but all I was doing was I was compressing the DTS chart so that I could get a view of what the market 70% of the market's range might be. So if I was looking at this particular day right here, I would probably bracket my day something like this. That looks like it encompasses about 70% of the trading range right here. Now, one thing about the DTS system that it doesn't show, that was a little bit more obvious on the time-based chart, was the clusters, right? We had a little cluster of trading up here and a little cluster of trading down here. On the DTS, it looks a little bit more even, but the principle remains the same. And the other thing I was saying was, if this was our day today, if this was the end of the session now, how would I approximate the trading for tomorrow? How would I approximate a range? Well, again, I'm just kind of eyeballing it. I would say, well, okay, this is a one-off. This is on the fringe. This is on the fringe down here. So to my eye, it looks like about 70% of the trading range would probably fall somewhere in here like this. Now, if the market opens up here and it drifts back down to this area, oops, I would anticipate some sort of support, right? Oop, doggone it, pushing the wrong button. I would anticipate some sort of support, and we might see the market rally from here. If, however, the market started trading back inside here, then I would actually anticipate the market's going to test the bottom end of this trading range and do the same thing on this end, right? It's either going to find support now or it's going to break and head lower. So that's a cool thing about market profile, where you're looking at, okay, where did the bulk of the trading occur and how might prices react to having encountered, you know, where that bulk of trading happened. So there's your crash course on market profile. Tony says, I used market profile for a long time. It's wonderful to watch, and I did make money with it. However, he says, as I get older, I didn't concentrate as well. DTS gives a much better picture of the market. Well, there you go. You know, folks, like I was saying with these old traders, you know, Richard Wyckoff and Charles Dow and all these fellows, they didn't even plot charts, but they knew a trend, and they knew when prices were moving sideways. So all these tools that you can add on, like market profile or fast stochastics or whatever, you know, Bollinger Bands, or there's some really funky stuff out there, those Ichimoku clouds and all kinds of stuff. That's not the secret. You know, that's not the secret sauce. All right, so here we are. We're kind of in a trading range now. We know that because our hawk is flashing us a bunch of yellow bars, and our trend lines are all mixed up. Our filter's all broken up. Yes, this is a first micro-macro cross signal. Yes, you could trade it higher. Just be aware that, you know, you're range bound. The market may try to test the bottom end of the trading range. So you'll want to minimize your risk exposure, maybe dial down your risk amount a little bit. As it gets closer here and perhaps turns into a macro pullback signal, the odds start to skew in our favor a little bit, because we would be looking at a retest of the highs, right? Get that test of the extreme before the subsequent failure. And I'll just throw this in. The market's still very much in a downtrend today. The better course of action is to actually wait for the market to produce another quality sell signal, another quality shorting signal. Okay, we're printing yellow bars now, so I'm going to nix that. Well, Tony gets the prize for the most unique question today. Tony asked, Eric, when you got your CTA, did you have to invent an indicator? If so, what was it? No, I didn't. But I have invented indicators. The support and resistance lines, that's me. Okay, getting an early signal here on the Eagle, green bar sell, and the sucker's going to run away on me now. Let's see if it retreats a little bit. See if I can get it with a limit order. Oh, wait. Okay, there's the limit. Okay, so what I've done there is I've just simulated the entry that I would have had right here. I had missed the signal. Getting it on the retracement, this is always a little riskier, of course, because see if I shoot a trend line across here. We're sitting right there. Oh, nicely done, Jim. Jim says regarding counter trend trades, what he does is he uses the equivolume. So he will, and I know Jim's probably watching the YM, so let's pull up the YM here. He'll look for a lot of buying to come in because we're in a downtrend. He'll look for a lot of buying to come in. In other words, the bars will get rather wide. And then he waits for a pullback to that area. So he says equivolume support was in the 20 to 23 range. At 1031, yeah, right here. And he got long at 22 and out at 53. So nice little trade back here to the hard edge and to the support and resistance line. Sometimes you can take some heat though. Jim's absolutely correct that at the turning points, the volume always increases. Notice here how the volume increases substantially. Here too, you can tell by the width of the bars. This is the dynamic equivolume bars from Indicator Warehouse. Again, it will work on any chart style, not just DTS specific. But this illustrates a little bit of a problem again with the counter trend trades. So we know there's substantial volume here, so substantial support coming into the price. So if we choose to buy here now, the trade does work out, but we're taking a little bit of heat, right? Nothing too terribly serious, but we did take some heat there before prices eventually ended up going a little bit higher. But yeah, that's a very good observation, Jim. Okay, so you can see loads of volume on this candle right here, and that would be because of the perceived support here at the trend line. We really need to see somebody get in there and take out that low. There we go. There we go. Give me that break even. There we go. All right. Now this is the next major area. If you're following Jim's strategy, you're looking to buy here. You're throwing in a buy order, trying to take advantage of the market moving a little bit higher. And that's to be expected at support and resistance areas. I keep getting tagged on these little break-even reversals. Gary is asking, what are the volume bars? They are the dynamic equivolume bars. So here, yours are probably just a regular candlestick. The dynamic equivolume bars, I'm going to shoot you a link here in a second where you can find out more about those. Okay, it's a long link, but there it is. Or you can just go to the system add-on page at Indicator Warehouse. Yeah, Jim says with the equivolume bars, you also need to be aware of how many times the market retests that zone. Obviously, the more it tests it and the more volume associated with those retests, the more likely it will be that the zone will hold. If we take a look here at the Eagle, for instance, you can see there was significant volume here, more volume here, a little bit lighter, but still lots of volume coming in here. So every reason to suspect that this support area might hold. Now on the top end, we've got some volume here. They were a little thin. They stepped in earlier here, a little bit of volume here. So it's really starting to look like we're going to enter a sideways trading range. All right, still range bound. Trend is still down. I anticipate that the market will keep heading lower. Okay, bear with me here just a moment, folks. Okay, sorry, just had a little housekeeping to do there for a moment. Lawrence is asking, Eric, which do you find more useful, current day open, high, low close or prior day open, high, low close? Neither, really. I know your DTS system probably, I think Adam or somebody added, where is it? There. I think this was Ray's idea. Because Ray had a strict aversion to trading the Globex Open, which is, where is it? Oh, is it not showing it? No, I guess not. Oh, there it is. There's the Globex Open. Ray always was very gun shy about trading near the Globex Open. He had his reasons. He got burned a few times there. But personally, no, I don't really care about the low of the day or the high of the day. If the market never broke the low of the day or the high of the day, it would, in 2 days, the market would be a flat line. Same thing with the prior days. So there we go. There's the high of the day. Here's the Globex Open. Here's the low of the day. I know a lot of people are interested in them. I find it distracting, so I take it off. Again, the rule is, does this help you make a decision? So let's go back here. Okay, here is our first micro macro cross signal. Here's the low of the day. Are you going to take this signal Or are you going to pass on the signal because it's close to the low of the day? Now, if you're like most people, and if you're honest, you're going to say, oh, well, that's the low of the day. I can't even hit my profit target. Or if my profit target was, say, a little bit further away, let's say this was the Falcon instead of the Hawk, you're going to say, oh, no, I can't take this trade because the low of the day is here. I'm going to find support. I'm never going to hit my profit target. And what happens? Boom. The market violates the low of the day and keeps on violating the low of the day every single time. So for that reason, I don't include it in my analysis. I don't think that is particularly helpful in making a decision. Am I going to, here was another first micro macro cross signal. Am I going to avoid that because of the low of the day? Am I going to avoid the macro pullback signal because of the low of the day? No. Am I going to avoid a buy signal because of the Globex Open? Say the Globex Open was hovering right here. Am I going to avoid a buy signal because of the Globex Open is just above there? No. Or even if it was right here for that matter. I know Ray would, and like I said, Ray had his reasons for doing so, but no, I don't find it useful. So I've actually eliminated it from my charts. But that's just me. If you find it helpful in your decision making, which is paramount, then by all means use it. Yeah, like Tony says, Ray was obsessed with the Globex high and low. And again, he had his reasons. In the past, he got burned at those regions, so he would avoid them. It's, that Pavlovian response. If you get shocked enough times, or if you suck up enough losing trades around the Globex Open, you tend to be a little gun shy trading the Globex Open. Gary mentions here about that was a good question though, Lawrence. Thank you for asking. Gary asked, if you compared the fat bars to the skinnier bars on a downtrend, it would appear that it would indicate some sort of divergence. Okay, excellent comment. But it actually doesn't show divergence. It actually shows a trend, believe it or not. So we know that the markets tend to get more active at turning points, right? Because it's an auction. Essentially, going back to the whole market profile thing, the marketplace is essentially an auction. And just like any auction, the popular items are going to get the most bids, right? If somebody rolls out a Picasso painting, it's going to get a lot more bids than the painting that your aunt did. So the marketplace is very similar in that respect, but instead of paintings or valuable things, we're dealing with prices. At certain prices, the market is going to say, hey, that's a Picasso. I want to buy at that price, or I want to sell at that price. And the rest of the time, whatever, we don't care. We'll wait until we get the price we want. That's how most of the market works. So you see prices fall down here. The bars are relatively thin. It's because there's not a whole lot of interest in these prices right here. And then what happens? Well, we hit this whole 46.68, 46.70 area, which I believe was near yesterday's low. Or actually, sorry, yesterday's low was up here. But now all of a sudden, for whatever reason, buyers are getting a little bit more active. They're saying, oh yeah, I kind of like this price. So the bars start to get a little bit wider. And then the buyers have their turn. The bars are relatively thin. Sellers are not interested in selling until it gets back up here around this 46.78 area. And then it presses down. Buyers not interested until they get even a better price at 46.60. And they say, yeah, okay, this is a sweet price. We're going to dig in now. And again, it flip-flops back and forth. So the thin bars actually show you a lack of interest in the marketplace. So prices are rallying, the bars are thin. That tells you that the trend is very likely going to continue, at least for the very short term. Like these very thin little bars right here, there was absolutely no resistance to the market heading higher. The buyers pushed that up, with a feather. There was nothing to hold them back. And then all of a sudden, here we are again at 46.80, near yesterday's lows, and all of a sudden, sellers start to get interested. All right, so it's not so much divergence as just showing you where the buyers and sellers are really interested in supporting or resisting price activity. Okay, I'm going to read this just for those of you who are interested, but Jim's on crack here. He says, another thing I chart are pivot points for all the indexes. He watches the Dow, the SPX, the Russell. The Russell is now on support with the pivot. And that gives Jim a lot of comfort. I know Jim watches the bank index. I know he watches the advanced decline. I know he watches a lot of things, and that's okay because that's how Jim trades. He likes to monitor the pulse of the marketplace, and that's all well and good. Do you need to trade that way too? No, not necessarily. Again, the bottom line, folks, does it help you make a decision? If it does, go for it. If it doesn't, you don't need it. Getting a little bit of a trend change going on here, a little bit of a conflict. Ooh, I'm going to be late for this one too. Here's a macro pullback signal. Nice thing about this macro pullback signal is, class, what do I like about this macro pullback signal? We haven't had a test of the extreme, have we? It's very likely that we're going to see the market at least try to retest the highs before possibly failing and heading lower. I wouldn't necessarily go in for the full 2% on this because we are still kind of range bound. And as we know, a lot of breakouts from ranges don't last, and the dominant trend today is down. So I don't want to get too excited about buying. Actually, we'll give this another chance. We got a second chance at a macro pullback signal here. And can I cover it down there? Yes, I can. So we'll kind of give that a little bit of a shot to the upside. Oh, now we're into yellow bars, so I can nix it entirely. Wait for that 4-arrow consolidation. Oh, actually, this would be my 4-arrow consolidation also, and it is a yellow bar. So we'll throw it in and just see whether it plays out. Turning now into a red bar buy. So buyers really, really struggling. Yeah. Tony says, Jim must be as busy as a one-eyed cat watching 3 mouse holes. Yeah, I think so too. But again, it's whatever works, right? It works for him. That's fantastic. Do you need to watch all that? No, you don't. I've shared this with you guys before as well. My trading friend, Tom Loge, he used to trade a $30 million bond fund, and he would watch 12 indicators on 7 different monitors. I think that's what he did. And And one day he said enough, and he stripped his charts down. He didn't even have a moving average line on his chart. Nothing. And he found that he did just as well with a naked chart, just watching the price action, as he did following all those indicators. And again, I'm not knocking what Jim is doing here. Yeah, see, like Jim says, I've got, he says, I've got 22,000 hours into this. Bottom line, profit on a sound strategy. Absolutely. Couldn't have said it better. And really, at the end of the day, the profit is all that matters, right? Are we turning a profit or not? And I sure hope that you don't think I'm picking on you, Jim. I'm not. It's trading is very much a personal thing. Gary makes a mention here about the Geiger counter. He says, it seems like the Geiger counter would be helpful around that area to decide whether it's just going to be a pullback or not. And that's absolutely correct. That's absolutely correct. So here we are with the Geiger counter. It's into the hard edge. We would anticipate the hard edge to hold and maybe prices to bounce here a little bit, but look at that. They're just chewing through the sell side. Let's see if the buyers can come back here now. No, they're still chewing through that sell side. So you might want to think about, well, maybe I'll throw in a short order here. You know, below the low, take advantage of the second push on this signal right here. Buyers getting a little bit stronger now. Oh, there come the sellers. See how they're holding? That's what you want to see. You want to see that dial spin over and just hold. Oh, now they're doing it to the other side. This dial is always going to flip-flop. It's always going to flip-flop back and forth because, again, that's the nature of the market. But when it pulls and holds and holds and holds, that's where you're going to get more interested. All right, you guys. I think we're going to shut down the room for the day. If you're continuing to trade, it looks like we're going to see a little bit of a hop here to the upside. Looks like the market might try to test the upper end of this trading range. Overall, the trend obviously still down, although we have hit a bit of a consolidation period. Yeah, just kind of be careful. We may have seen the move of the day. You see all these yellow bars cropping up here in the hawk. All right, you guys, I'll catch you again tomorrow morning. Friday's session should prove to be very interesting also. Lots of activity tomorrow to be expected. All right, talk to you then. Bye for now.